Hi, everybody. Good afternoon. Sarah Springer here, broker owner of Pathways Realty. I welcome you to this video chat session that I'm going to be having with Robert Barnett today. Thank you so much for tuning in, and we hope what we're going to share with you today will be insightful, educational, and beneficial to you. Take care. Okay, so we are here still with Robert Barnett going into our next segment. He's with Loan Depot here in Tallahassee, Florida, and I'm Sarah Springer, broker owner of Pathways Realty, also here in Tallahassee. So in this next segment, Robert, I'd like to talk to you about the good news. We have amazing interest rates right now, some of the lowest interest rates I think I have ever seen. But I've also heard that maybe it's a little bit of a double-edged sword and there might be some strain on the mortgage industry. So how are these rates affecting you guys?
Well, yeah, right now we are currently seeing interest rates that, again, it's probably been about 8 years since we've seen them this low post-recession, once they really started aggressively trying to get the housing market to recover. And so we are back at that with interest rates in the low threes, getting right below threes into the twos. And as a result, we're seeing a very high application volume for refinances. And as you mentioned, there are pros and there are cons with that. The first kind of con actually is just the infrastructure within the mortgage industry as a whole nationwide. Again, once rates started going down about a month ago, we saw application volume increase by 6, 7, 8 times within just a few week period.
Wow.
And as a result, just the timeframes for being able to process, underwrite, and close on a nationwide basis has definitely stretched out. So right now you are looking for, most refinances are 60 days out. I have already seen talks with some lenders that they're 90 days out. And there's a lot of other lenders, even some of the very big lenders that are out there, are not allowing rate locks now on refinances or purchases on new applications coming in, just because they're kind of already maxed out. And what happens is, with all these people applying for mortgages, when they work with these lenders, the lenders have to take into consideration how much they're lending out and how much cash they internally have available to lend on a short term. There's been a big credit crunch nationwide, and there is a lack of liquidity within the mortgage market because investors aren't buying mortgage-backed securities as they were. And so a lot of the outside of the box type of lending, jumbo loans, non-conventional or government loans, unfortunately, a lot of those have gone away because the investors have gone away just temporarily as a result of everything that's in the market. And as a result, the credit box has gotten a little tighter with all of the other remaining loans as well. So again, it is a great time to refinance, but you may find it's going to take a little bit longer, and you may find that that credit box is also a little bit smaller than what it was even a month ago.